It's universally recognized that China is the world's second largest economy. Sadly, the days of China being the second largest economy are about to end. The Chinese stock market is crashing. CSI 300, one of its benchmark stock indexes, is down and has lost about 40% of its value since hitting its peak in 2021. China's most prominent firm by market capitalization has had to let go of 60% of its stock price, and there is a general reduction in the value of Chinese businesses. All of these point to one thing: the Chinese economy is about to collapse. From all indications, China's economy is about to explode, and there are many questions on people's minds worldwide. Chief among these questions is, why is China's economy going through a hard time? We will answer these questions in a moment, but in the meantime, kindly like and share this video. Also, please subscribe to this channel if you are new here. So China's economy is clearly at the receiving end of some heavy blows, and folks all around China do not feel happy about this. Well, this is as expected, but beyond people just being unhappy about the happenings in the Chinese monetary system, there is a significant drop in confidence in the Chinese economy, which is terrible for the government. For some reason, the negative effect of China's economic woes could have been less if this economic challenge was a global issue. Sadly, it is not, and even the United States, with which China is trying to rub shoulders, is going through a different challenge. This worsens things for China, which is underperforming compared to other countries in its league. Talks of China's economy not performing so well seem out of place because of China's GDP numbers. According to the GDP numbers, the Chinese economy experienced growth of about 5.2%. This might be some growth, however, as far as China is concerned, this growth is too small. Now, this could be better, but it gets worse. There is a discrepancy between what the Chinese government and the market are saying. The Chinese government is telling people that the Chinese economy is growing, but the market is saying precisely the opposite. The economy is crumbling. So who do we believe? Well, at this point, you do not need to be an expert in economic matters to smell foul play. Either the government is lying to people, or the market is lying. Finding the truth might seem challenging, but it is easier than you might have assumed. The market has nothing to gain or lose by saying whatever it has said about the Chinese economy. On the other hand, the government has a lot to gain from making the people believe the economy is doing way better than it is. Going by this, the government is most likely lying to the people. Why are the authorities lying to the Chinese people? This is a question you need no help to answer. Sadly, the answer is obvious, and it is staring everyone in the face. The authorities are lying to the people because they want to hold on to power. What is going on in China? A lot is happening in the Chinese stock market that the average person doesn't know or understand. The Chinese stock market is considered an indicator of how well the Chinese economy is doing. But sadly, this stock market is not as accurate as you think. Institutional investors control about 50% of the stock market. These organizations include banks, insurance providers, mutual fund providers, etc. These organizations grow their capital by buying stocks. As much as they haven't been the best for the Chinese economy, they aren't so bad. Also, they are able to function in the Chinese economy. They also have a place in the economies of other countries, and the United States is one of them. But this is where things differ. Unlike other nations where these organizations are free to do what they want, in China, they have to invest in ways that favor the government. This has come in handy as a tool for the government to keep prices up in the middle of a crash in market prices. As much as the Chinese government has control over several financial institutions in China, quite a few institutions are not under the government's control, and these institutions are expected to balance things out. Sadly, things are not as straightforward as this. There are financial regulations in China that ensure financial institutions do not make any moves that will make the government look bad in the eyes of the people. The aim of doing this is to ensure that the Chinese economy appears strong. This gives the perception that all is fine. Has the Chinese government's approach worked? The Chinese government has made several forceful moves to make the economy look great. However, these moves do not yield the intended results, and the government is refusing to take the blame. Instead, it is pointing fingers at some bankers. Quite a few bankers are not giving in to the pressure of pushing towards the government's financial goals. This group of people might be doing their jobs correctly, but the government doesn't seem interested in how well they carry out their duties. Since they refuse to push the government's agenda, they must endure slashed bonuses and significant pay cuts. What are the signs of a failing Chinese economy? Several factors indicate that the Chinese economy is doing poorly. Some of these factors take time to notice, but some are quite glaring. Foreign investors seem tired of doing business in China, as they need to make the expected profit. In the absence of anticipated profits, they are selling off their stocks in China and moving on to other markets. However, this is only one of the significant signs of a failing Chinese economy. There is another, but before we see it, kindly smash the subscribe button if you have yet to do so. Moving on. Apple has been doing well in markets all over the world. However, China, with its large population, is different. Apple is making less in China than it did in the past. It has seen a 113% drop in its revenue. If you don't take anything else from this, it would be difficult to miss that the Chinese market isn't bubbling like it used to. How did things go wrong for China? It might be difficult to tell exactly when things began falling apart in the Chinese economy. However, one glaring thing is that the Chinese economy has yet to recover from the effects of the COVID-inspired lockdown. Not every nation that was affected by the lockdown has recovered, but a good number of countries have built back their economies. These economies have recovered so much that the world is dealing with inflation. However, the exact opposite is happening in China. They are going through deflation. Basically, in China, prices are going down instead of going up or remaining stable. This is a good thing, but it isn't the best of situations. When a country experiences deflation, everything becomes a little too cheap. Firms make too little money and might need help to pay workers. That's not all. Cash flow drops as people would rather hold on to their cash, hoping prices will drop further before spending. China going through deflation is terrible, but I wonder if people understand how bad it is. If everything stays the same, there will be a significant reduction in investments, which could lead to unemployment. Is deflation China's most significant economic challenge? Deflation is a significant problem in the Chinese economy, but there are other challenges the Chinese economy is dealing with. There is also the issue of the debt deflation spiral. Only a few people know about this, but the problem in China's financial system has affected credit. This is one reason for a significant decrease in spending habits in China, which ultimately increased deflation. China is not the only country that has dealt with the debt deflation spiral. The United States has dealt with the same issue. But if you think this is a big issue in the United States, then wait until you learn what is happening in China. Amid the deflation issues and the debt deflation spiral, China still has to deal with a real estate crisis. The Chinese real estate sector used to be a big deal, but there has been a lot of change in the last couple of years. Property developers need more funds to keep developing properties and might have to rely on the banks for funding. Sadly, if nothing is done about this, the world will witness the collapse of about 50 property developers in China. But how did China get here? When the real estate sector in China was booming, lots of property developers took advantage of the system. There was nothing wrong with this, however, some things needed to be done correctly. There was a significant scheme that could have gone better. This scheme involved developers buying land and selling houses they had yet to build. Of course, this seems hard to believe, but it's true. They took the money from the sale of these virtual homes, and instead of building real homes with these funds, they bought some more land and sold some more houses that didn't exist yet. The government was aware of what was happening and knew these moves were wrong. However, they seemed to care less, as this business model helped boost GDP, which signified growth. The housing sector was running a Ponzi scheme that would crash eventually. But no one cared because money was being made. There was a crash, and the Chinese economy was severely hit. How will the housing crisis affect things? China's shrinking real estate sector over the coming years will have a huge impact on heavy industry and the commodity markets globally. There's going to be less steel demand, there's going to be less cement being used, less glass, for example. That impacts heavy industrial areas in China that produce these raw materials. China has a significant issue, and fixing it won't be easy. According to Hao Hong, the chief economist of Grow Investment, fixing the property sector may be a multi-year or even a decade's work in front of us. The reason being, we built way too much housing for Chinese people. History shows that credit-fueled real estate booms do not end in a whimper. Rather, they end with a bang, and nearly always with a major banking crisis. Their business models were only ever going to work once there was an interruption in their ability to borrow or generate sufficient pre-sales to meet their short-term liabilities. For this reason, the result is likely to be the same: default. If not handled properly, risks in the housing sector are likely to trigger systemic risks. That is why prompt steps must be taken to address them. How low do you think China will fall before its economy starts improving? And how long do you think it will be dealing with economic woes? Please let us know what you think in the comment section below. See you in the next video.